Welcome back to episode 2 of the Banking Podcast. On this episode, we're going to get into all the information you need when it comes to lending again in a higher level. We talked a lot about the different types of funding you can access when it comes to like loans, lines of credit, credit cards, and things such as that. But now we're going to get a little bit more in depth when it comes to the process and what you actually need to have versus what has been told to you from your favorite people on social media. So we're going to start from the top. And this is something that is probably one of the most undiscussed topics when it comes to the mainstream. But when you deal with bankers every day like I do, you're going to get the truth. And they give us all the insight so that way we can make the best choices and help our clients at the highest level. So again, here I am, Ashton Sanders, and we're going to get right into it. Starting off, bank deposits, okay? When it comes down to building a relationship with a bank or whatever lender it may be, you want to make sure that your deposits are strong, okay? So when you look at like a business loan or a line of credit and you think, oh, this person got this crazy amount and this other person has an even higher score and got less than them. And you're like, how is that possible? Because banking relationships mean a lot. So many people, when they get a credit card or a line of credit, or even when they want to apply for one, their focus is how much can I get out of the bank, right? But the bank is looking at, well, what have you put into our bank? Are you making regular deposits? Because that's how the banks make money. If you're not depositing money on a regular basis, if you don't have an average balance that's strong, this is going to hurt your opportunities when it comes to getting the larger amounts of money. Again, remember, everything we discuss is always about getting you max dollars. So we're not talking about getting you, a quick $5,000 to $10,000 card. This is about getting you hundreds of thousands, if not more, into the millions. And as you continue to go through our process and learn about everything you need to do, you'll start to see these things start to take place because we definitely can assist you in that process. So to add on to that, when you get into the deposits, you're thinking about, oh, well, I just got to, open up a bank account and put some cash in the bank. No, that does help. Don't get me wrong. If you have a strong opening deposit, when you get into a bank, it actually can put you into a different tier, such as a platinum member. Like when you deal with like a bank like Chase, where they have an opportunity for those that have higher income, you can actually deposit, let's say $100K, and keep that balance in there. And as a result, they'll allow you to get qualified for a lot more lending than any other regular person applying at the bank, just because you keep a certain amount in the bank so that they're able to make money, okay? Because they lend your money out. They may, use it for other investments, things like that, and you keep your balance in there. But as a result, you're able to get a lot more money from them as well. Now, the other part of that is even for a lesser level in terms of the account, the more you put in, let's say you put in like $5K, right, into your business bank account, and you keep having transactions go through there, meaning you want to set up a merchant account, okay? If you don't know what a merchant account is, that's for you to process credit cards, okay? So when someone wants to pay you, you want to be able to accept credit cards, not just taking only Cash App or only Zelle. You want to have a real merchant account at a real bank, all right? Why does that work? Because when the bankers look at a client, if they see you have strong deposits coming to the bank, your average balance is strong, now they're much more likely to feel comfortable helping you get approved for a larger amount of money. As well as when you have a merchant account and you're processing transactions on a regular basis, where you have, $3, $4, $5, $10,000, even smaller or higher, but just having consistency is what I'm primarily focused on when it comes to getting your transactions done through that bank. Okay, when they see that you built a relationship such as that, now you also have a personal account with them. You have a savings account on the business side and on the personal side. That makes that particular bank feel a lot more comfortable lending you more money. Too many of you are looking at the banking side and saying, oh, well, I'm just going to get a credit card here, move on. Get a credit card there, move on. And they're not looking at the overall picture when it comes to getting access to the larger numbers. All right. Now, the reason why this works as well is because let's say you set up that deposit relationship where you get your, checking account, and then you got the savings account, or the business and or the personal. Now, when it comes to buying cars, now when we talked about like the equipment financing, it makes it a lot easier to get through the door. And there's a lot less red tape, because when we deal with this process of lending, there is the written rules and unwritten rules. Okay. And we'll get into more of that as we go. But in the written rules side, you're looking at the situation where, you want to make sure that you're following all the tiers in terms of having the right credit, the financials, all that stuff, right? But if you already have bank accounts or a bank account at that particular bank, it makes it easier. Even if your credit is bad right now, this is what a lot of people won't tell you as well. When your credit is already in a bad spot, the temptation is to say, I can't apply for any lending. And in some ways that's true. But if you do have banking relationships where you at least have approved or got approved for a bank account, a savings account at multiple banks, right? Like for me, I have about 30 plus bank accounts. Okay. I don't just deal with one or two or three. So I have a lot. So if I show you, I have a bunch of cards, all that stuff. The reason why is because when you deal with the banking space, you want to have as many as possible, because when my credit wasn't as good as it is now, I had to have these relationships so that by the time my credit was good, I have so many options because I'm already verified at the bank, because they've already seen me put money through there, thousands of dollars and so forth. So when they see that, and also they see you leaving money there, it makes them a lot more comfortable lending you more money. So am I saying that everybody has to have as many bank accounts as me or even more? Not necessarily, but you do want to have some strong relationships, especially while your credit is in process. Because again, by the time you're ready on the credit side, you want to have all of that out the way. Because now when we take you to a different bank or a different lender, they're not questioning, is this really you? Is this your real business? Is this your real income? Is this your real name? Is this your real driver's license? Do you really live at this address? Is your business over there in reality? All those things go away, because again, we're connecting you directly with one of our top bankers at the bank, if not the president or vice president. So because of that, you already come in referred, and now you've built a history up. So the more you do that, the higher your options will be, and obviously the more funding you can get. So that's why I said having strong deposit relationships is just as important as your credit. Because some people, when they hear about getting funding, they only talk about having a good score, having some positive accounts and trade lines on your credit report. And yes, is that important? 100%. But when it comes to getting those larger numbers, okay, they're going to look at your overall relationship. I've had clients that have been declined because they had a situation prior to with either the same bank or even other banks that, let's say they had a bad relationship with the bank and they didn't pay a bill, or even if they did pay, but there was a series of, let's say, overdrafts or just not the best business, right? And there was no credit card, there was no loan, there was no owed loan or credit card debt, but the bank account was not managed the right way. They've been declined for a new bank account from a completely different place or a new credit card solely because of the history they have in the other previous banks. How do they find that out? Check systems. So if you're not familiar, you want to always know about check systems. This system that almost every bank is now using, either check systems or they'll also check your early warning. Early warning is a very important one too. A lot of people don't know about these alternative bureaus. But when you have an issue with check systems or early warning, a lot of times that can block you out of getting into certain banks and getting approved for larger numbers. So when you're getting funding and you're trying to make sure you get the most funding, you want to make sure you have several bank accounts. That way, not only are you understanding that you'll be able to build those relationships once your credit's right, but also so that you know there's no issue with you in banking as a whole. Because there's a lot of times where we've had clients with 800 scores, with high income, and still get declined because they had a bad banking relationship. Again, going back to why we call this the banking podcast, because when you do the banking right, the funding naturally comes with it. Okay. So this is why you have to make sure all that stuff is put together in a right, orderly fashion. All right. So the next part of this whole process is understanding your credit report. You want to make sure that you completely can see through your report and know exactly how to evaluate it, just how the banks would evaluate it. Okay. Because a lot of times you all are way too confident or not confident when it comes to your credit report. And there's a lot of misconceptions on what matters, what doesn't matter. And that's why I want to make sure we clarify that with you today. So when it comes to this process of, evaluating the report, obviously you're going to have, a bunch of different accounts that could be on your report. The more accounts that you have, a lot of times the better you can be. But sometimes it can actually hurt your chances if you have too many of the wrong type of accounts. Okay. So you have to understand, based off the type of funding that you want, you have to know exactly what you have to qualify. Okay. From a credit perspective. Now, normally most people, when you're first getting going with the business, you want to get credit cards. As I talked about in the first podcast, we want to have low revolving debt. Okay. If you have high revolving debt, you're going to find yourself in a situation where a lot of credit cards are going to decline you. Okay. Most of the banks will say no, because if you already have a high usage, then they don't want you to end up using that same card with them. Unfortunately, it doesn't make all that much sense to me a lot of times, just because they gave you the money. Now they penalize you for using it. So, that's its own story. But nonetheless, when you're trying to get, the highest limits, you want to make sure your revolving debt is low. So revolving debt is mostly credit card debt. Okay. So if you have, let's say, an average of, $50,000 in total credit cards, right? And in that process, you have maybe 40,000 of the 50 that's in high usage. That's considered high usage. Okay. Meaning that you're using $40,000 of your 50K. So from the bank's perspective, you are looking like you're going to use that last 10K or possibly max out. So from the bank's perspective, they want you to always be in a situation where you have credit, but you don't need credit. Okay. Throughout personal, throughout business, that's the narrative that you want to have and keep. And that's also the hardest one to do at times, because we all know life happens. But when it comes to looking at your report, you have to make sure that everything matches, because if you don't do that, you will have problems, because you'll get pulled into bad offers, bad loans, and the wrong terms, or too long of terms or too short of terms, and interest rates that are just not ideal for your situation. So the other part of that is, when you go through looking at your report, if you see that you have late payments on your credit report, if you have collection items on your credit report, you want to get all that cleared up completely before you go for a large amount of funding. Now, let's say you have a situation where those late payments are 2 years ago. Okay. The late payments that are 2 years or older, those do not hurt your credit as bad as the most recent ones. All right. So when you're looking at late payments, let's say if it's a 5-year-old late payment, you don't have to feel horrible about it. Okay. That was 5 years ago. Now, will some lenders give you a problem about it? Maybe. But most likely, if they're asking you about a payment that was 5 years ago, they were probably going to decline you anyway, and they're just looking for a reason to say no, to be honest. Okay. So when you're looking at your credit report, those 2-year-old plus lates, fine. The recent lates are a big deal. Okay. So if you're in a situation where you got recent late payments, it's going to drastically affect how much you can get. Can you turn it around? Yes, by making on-time payments. Ideally, 6 on-time payments straight. Okay. That would help. A year of on-time payments straight would be way better, right? But when you have your file and you don't manage it right, or if you have a situation where your funds come in and you from your job or business and it doesn't go to the right places, or maybe it just wasn't enough, you find yourself in these situations. We understand that, and we can help you kind of navigate the whole part of the credit and make sure you're in a better situation. But in the initial issue that you're looking at, you have to get those things cleared up. Okay, they cannot be on your credit report if you're trying to get a large amount of money, because what happens is when you're trying to get a larger amount, the banks will look at, well, they had a late 2 months ago, but they told me they make this high number of income. How is that possible? That would imply that you either forgot to pay your bill on time, or if you have several recent lates, then it looks like a pattern of inconsistency, and it makes the banks feel a lot less comfortable lending you a larger amount of money. So one late payment, let's say that payment was for $100, or if it was for $50, right? You may end up paying back anywhere between 50 to 100,000 when it comes to the losses that you got because you couldn't get approved for that card that was for 50K, or that loan that was for 50K, that line of credit that was for 100K, all because you were late for spending $100. Okay. So you have to understand, late payments can really put you in the hole. All right. So when some people are out here deciding, well, am I going to go out to eat with my friends, or am I going to pay my credit card bill? You have to pay the credit card bill, because that meal with the friends is going to cost you so much more than whatever the feeling is you have about disappointing them. I can guarantee you those same friends will be there the next time. And if they're not, let them go. All right. Because again, you got to make sure your financials are on point, because all these things are connected. The wrong people around your situation can really put you in a bind, because they'll influence you to spend money you weren't supposed to spend, do things you weren't supposed to do. And now you got collections on your account and they're looking at you like, why did you do that? This is the problem. Okay. So when you do this, you have to make sure that you're very disciplined. You cannot, and again, cannot get late, especially when you're trying to get large amounts of funding. All right. This is not an optional thing. This is not, oh, well, one time won't hurt. No, this is not going to work. So when you have those lates, it just takes you out the game, and it costs you way more money than whatever the bill was. So it's more important to pay it than to deal with the repercussions of everything you can't qualify for because you missed that payment. All right. Now, the next part of this process, of which when it comes to looking at your credit report, is also understanding when you have collection accounts. All collection accounts are not equal. As of January 7th, your favorite president, or lack thereof, did make a change when it comes to this process with the CFPB as well, when it comes to the medical bills. Okay, so if you have medical bills on your credit report, they're not supposed to be there. A lot of times those show up in the form of collections. Okay, so you may have a situation where you have like a LVNV funding or portfolio recovery. Accounts like that can report. Again, that's why you want to work with someone that can help you clear that up when it comes to getting those negatives off the report. Because again, if you're going to have a medical bill, which should have never been on your credit report in the first place, to be honest with you, because if you're trying to, get help, I don't know why you would get penalized for that whole process, because a lot of times you didn't plan on getting sick. You didn't plan on getting an accident. You didn't plan on breaking a leg, and now you're in this whole mess. So going back to the point, those medical bills shouldn't be on your credit report. So if you see them, you know there's already an issue. And those, a lot of times you can call the credit bureaus about that, or whoever put it on there, you need to tell them they've already violated your rights, because it's not necessary. Now, the other part of looking at your report is not just the collections or the lates, but it's also charged off accounts. So let's say you owe a larger bank, such as like a Navy Federal or Bank of America, Chase, and so forth. Those situations can be a lot more serious, because when you're trying to get those cleared off your credit report, particularly Navy Federal and Chase, Discover, Ally Bank, they're going to fight pretty hard to keep whatever negative accounts that you have on your report. So going back to why I said you want to make sure that you pay your bills on time as much as you possibly can. Now, is it easier said than done? Of course. And a lot of times, if you find yourself in a situation where you can't, then you got to work with someone like with us, so we can kind of coach you through that process and give you the best strategy. All right. Because when you're looking at your report and you see these negative accounts, whether it be collections, late payments, or charged off accounts, those things have to be cleared up when it comes to getting lending. Now, it all depends on what type of lending. That's the interesting part. As we talked about in our previous podcast, the process with merchant cash advance loans, they will give you the money with your credit jacked up. So you can have all those lates and not even feel bad about it. All right. So you don't have to think twice. You can have a fresh late as of yesterday. Okay. And no one will stop you from getting the nonsense loans. But again, if you feel like paying daily or weekly, then that's up to your prerogative. But again, look at what it cost you, because you might have owed $100. You might have owed $200 or $400, but now you're going to lose out on all the potential funding you could have gotten, or be forced into a situation where now your loan options are at the lowest level. So you have to take 1 day or 3 day options. Again, you'll be forced in situations where you'll have the lowest option. So you may have, 1 day, or daily or weekly payments where you have to make, those payments on that. And now it puts you in a bind. So that's why, again, you have to make sure that you get this stuff done correctly, because if you don't, you will be, in a situation. All right. So when it comes to looking at your credit report, making sure all that stuff is good is always important. But let's switch over to the positive side. Okay. Let's say you don't have none of those issues. And let's say you just have maybe a high usage. Obviously, you want to get those credit cards down, like I said, to that under 20%, preferably 15 and below, ideally, for best results. But the other part of that is you may not have many accounts to begin with. So sometimes you can get fooled into thinking your score is higher than it is or better than it is, because you may have a 780, 750 score, but you may have 4 accounts on your credit report. All right. So a simple rule of thumb when it comes to looking at your report is factor in your age. Okay. So let's say you're between 18 to 25. In that time, you're probably not going to have a lot of credit. So if you have a good 5 accounts on your credit report, maybe 6 or 7, that'd be great. Okay. You're in a good situation at that 18 to 25 mark. From that 25 to, let's say, 35 mark, you really want to start to get anywhere between 10 to 15 accounts on your credit report. So that could be school loans, that could be credit cards, that could be auto loans, whatever. But you want to get that good mix. The more of a strong mix that you have when it comes to the different types of accounts that you pay and pay on time, the higher your chances are of getting approved for more money. Because from the bank's perspective, they got to see that you can handle each and every type of lending, whether it be for a mortgage, whether it be for a credit card or a regular personal loan, business loan, a line of credit, or whatever. So all of that matters in your process. So when you're thinking about it at that age group, you got to make sure that you start to build that up. Now, can you get approved with a little bit less? Yes. But again, you have to consider what type of approval you're asking for. Again, every time I talk to you, I'm going to make sure you go for the max, not for the minimum. Okay. Because now you can operate at the highest level. Now, when you get to that 35 to, let's say, 45, 50 mark, that's when you want to start to have 15 to 20 plus accounts on your credit. Okay. Now, if you have that at a younger age, even better. But you want to have a good amount of accounts, and you want to have a mix of accounts. You do not want to have a bunch of credit cards only, or a bunch of auto loans only, or a bunch of houses only. Because some people would think, well, I have, 15 houses. I'm doing well for myself. You are. But when they look at lending, if you're applying for a revolving product, they look at revolving debt as well as your other debt, but especially your revolving debt. If you're getting an installment means a loan, right? A loan meaning cash given to you from the bank. Okay. If you're getting a loan, then they're going to look at your installment history. That's auto loans, that's mortgage loans, mostly personal loans, and how you've managed those, as well as your revolving debt. Okay. So when you're applying for a different type of loan product, you have to know what your strengths and weaknesses are. If you know you have a lot of recent loans, especially because if you have a lot of recent loans, you then have to look at how much income do you make? Do you make enough money from a bank's perspective to be able to afford the loan, your rent, your car note, and all your other monthly expenses? Because again, when we go through the process of getting the larger numbers, they're going to give you the option, not even really the option, they're going to pretty much make you do a personal financial statement. On that personal financial statement, you're going to have to list every type of account, all the debts you have, whether it be for credit cards, loans, lines of credit, all the above. Okay. So, and it's only on the personal side for that side. But when you provide that information, it's going to get pretty ugly if you don't have your stuff in order. So let's say you have a bunch of recent personal loans, and let's say those loan payments equal out to about $5,000 a month. Well, if you make $15,000 a month, and let's say your rent or mortgage is $3,000 or $4,000 a month, well, now you really only have, give or take, a good $5,000 to $7,000 a month extra. And if you have a credit card payments or a total of credit card payments that are equal up to about $1,200, then you have an auto loan that's another $1,000. Okay. Well, now you just keep lowering the number. So now when the bank looks at how much you can get approved for, they're factoring in what you actually have that's reflecting on your credit report, as well as what you put on that personal financial statement. So this is why this part is extremely important, because if you're trying to get approved for a larger amount of money, you have to understand what your weaknesses are on your credit and what your strengths are. Okay. So if you're trying to get a larger loan for your business and you have a bunch of current personal loan debt, it's going to be a little harder. All right. So you have to understand that in that situation, you may need to work on getting more credit card debt or credit card offers versus the personal loan offers. In the reverse, if you have a bunch of credit card debt, then you may need a personal loan to actually pay off some of the credit card debt, which is what I recommend a lot of our clients to do. And we can assist you with that process, is paying off some of the personal credit cards you have. And then when your scores goes up, now we can help you get a lot more funding versus if you're in a situation where, hey, I got high credit card usage and my score is 650, but I want to get 500,000 in the next month. Makes the situation a lot more complicated. So all these different factors are all coming back to having your credit report as strong as possible. And the older you are, the higher the expectation is for you to have more accounts on your credit report. So if you're walking around and you have 1 or 2 or 3 accounts, you're going to have a problem, because now the banks know one of two things happen, or maybe 3. Either A, you cleaned your credit recently and they can't tell, or you don't use your credit, which is also a problem, because sometimes they're wondering, well, how are you going to use the credit when you have the opportunity? Because there's only so many references they can go off of when it comes to trusting you with a larger amount of money. So what are they going to do? They're going to either decline you, give you a smaller amount to work with so they take a smaller loss if you actually default. Okay, so this is the deeper level underwriting that you have to understand so you know why certain things happen and why they don't. So this is all relevant. Now, when you have the credit report strong and you do the things that are needed, you'll be able to get where you need to be. But you have to go ahead and get the coaching. That's why we come here and we help you to kind of go through that whole process so you understand it. All right, and the next piece to the puzzle is making sure that you have your taxes ready and complete. Now, this tax thing is, just to be clear and for all disclaimer, we are not demanding that we are your tax professionals, so don't hold us to any type of specific thing in terms of that. However, we just want to give you some insight to think about, because when it comes to the lending side, this will always come up. All right. Now, when you're looking to get funding, especially at the highest level, the first question is going to come up is, do you have your taxes filed? Okay. Whether it be personal and business, they want to see normally at least 3 years of taxes done. All right. So this is where it gets tricky. A lot of clients have a situation where they want to show the minimum amount of income on their taxes. So they falsely don't report their true income. What does that mean? Means that, let's say they make 300K. They'll only report 150 or maybe 100K. What happens when you say you only make 100, but your bank statements say otherwise, or even if you have cash that says otherwise, you're actually violating the tax law, which will cause you other issues down the road. But at least in the immediate issue, you want to make sure that you show as much of your income as possible so you can qualify for the maximum amount of funding. Okay. Now, most people would say, well, I don't want to owe the IRS all this money, right? And they're afraid of that. But I'll give you a different way of looking at it. Let's say you have 150K in income, and let's say the IRS says you owe $50,000 for, let's say, 2024's taxes. And then let's say you had a similar amount, maybe a little bit less for the previous year's taxes. Okay. What happens is, if you say that, you made this amount of money and you don't, you may take some of your expenses out as a business owner, you may have some deductions, but you may not put all your deductions in there. Typically you're going to see a much higher approval rate when it comes to lending. If you go and you take all the deductions out, right, you're going to have a hard time getting approved from any bank anywhere for any large amount of money. Now, if you were to say that you did, let's say if you out of that 150, and let's say out of that 150, maybe, I don't know, 60,000 or let's say 30,000 was your expenses. Well, now they're only taxing you on the 120, which will make your tax bill a little bit less, but it could obviously be lower. However, when it comes to funding, now they're looking at your overall income over the last 2 years. This applies to buying a home. This also applies to getting business credit cards, personal credit cards, and business loans and lines of credit. So let's say you want to report, let's say 150,000 for last year's taxes. Okay. So let's say 150 for 2024 and another 125 for 2023. All right. In that situation, normally your tax bill, if you reported absolutely no, expenses, you're probably upwards of 90K, $80,000 to $90,000 in tax bills. All right. Which is pretty high. And I definitely can understand the concern. However, here's what you have to consider. You want to report that you have expenses, obviously, because you don't want to put yourself in a scenario where you have an unnecessarily high bill. And more importantly, that you have to be truthful in terms of what your real expenses are. If you have, real expenses in the business, which all of us do, then you're going to need to report all that information, right? But the problem is some of you get to over-reporting, where you report everything as a loss and you start just saying, oh, I lost this and lost that, and now I can't go through and do anything. And now your business is at 100,000 in the negative. Okay. Now, why in the world would any bank or lender give you money when your business is way in the negative? You're in the red. Why would they do that? So it makes no sense, right? You wouldn't give yourself money. You wouldn't give anyone else money if their business was way in the red. Why? Because no matter how good their credit is, there's no way for them to be able to pay it back. So this is why I said you have to make sure your taxes are done correctly. So that way there's no chance of you ending up in a situation where your credit and income is high, but your tax is misreported because your tax person keeps telling you, oh, we want you to show as much of a deduction so you can either get money back because let's say you have a child or you're married or you had a job and a business at the same time, but you're now in a situation where when you make that choice that all the banks are saying no. Okay. Now the other side of this is, like we talked about before, you're going to have a higher tax bill if you do claim less deductions. But as much money as you're losing in that department, we will work to get you 10 times more when it comes to the funding side. So that way it will be worth that loss, okay? Because when you get the funding, now you can operate. And this is the beauty behind that. The funding money that you receive, whether it be loans, lines of credit, credit cards, all of those funds are not taxed, okay? So what does that mean? You can get as much as you want, and there will be no seizure of your credit cards and all that stuff. Okay, you're in a situation where that's pretty much impossible or highly unlikely to happen. And now, let's say you were going to owe $30,000 in taxes, but you got $200,000 in loans, lines of credit, and credit cards. I think it's worth that gamble. Okay, so stop running away from the government by not trying to pay taxes. You want to run into it because the more you can show you paid, keep in mind, the banks look at the government as the ultimate proof of income. Meaning that if you paid, let's say $30,000, $40,000, $50,000 to the government, or even if you set up a payment arrangement over time and you just owe a large amount of money, as long as they see you making those payments, whether it's for a mortgage loan that they're trying to get you approved for, or even the business loans or lines of credit, now they'll be able to feel comfortable that, hey, you're actually somebody that gets it and understands the game. Okay, so you do not want to be a person that just takes a bunch of losses and shows no income, but you also don't want to be a person that shows no losses because now it looks like you're trying to falsely inflate your income. Okay, so you want to make sure you have that happy medium so that everything checks out. So when you do that, now this is how they'll calculate it. So they look at the last 2 years, right? So again, as we talked about, if you reported that you made 150 in 2024 and 125 in 2023, okay? So now you're right at 275 in total income over the last 24 months. So the more you go through the process of getting lending, they're going to look at, okay, well, what was your profit in that? And let's say in that 24 months, maybe your profit was $240,000. Okay, well now that puts you at a situation where now you have $10,000 a month in income that's not hurting you. Profit, and it's as a positive side or positive cash flow, whatever you want to call it. So when you want to get a loan, now your loan term and or line of credit term can be a lot higher because they see that you can afford to pay $2,000, $3,000, $4,000 even when it comes to your monthly payment. So if your monthly payment's higher, you only get a high monthly payment if you have a higher loan amount, right? So this is all connected. So that's why you want to make sure that you have the taxes structured in the best way possible so that you can make the most money, get approved for the most amount of money. And now you're not in a situation where every bank's declining you because they see that you can't afford it. Because the other part of this puzzle, especially for some of those of you who are full-time entrepreneurs, if you make 10K in positive income, keep in mind the information on that personal financial statement is going to come up. So let's say because remember the information I just gave you was mostly for your business income. Okay. So now factoring your personal income and more importantly, your personal expenses. If they see that you have a bunch of personal expenses, plus you have a bunch of losses in the business, that can hurt you. I had a client that did, right around, I think it was like 545K. He reported that he had 485,000 in expenses. So it made him have basically around 60K in income, okay, in terms of profit. But he also had a $500,000 house, which I believe cost him right around like $3,000 or $5,000 a month, something like that. I don't remember exact numbers, but it was a higher amount. When he did that, it took him completely out the game when it comes to getting approved. Okay, so then we had to go through making sure he filed the 2024, and then he was able to qualify and get quite a bit of funding. But when we go through this, those taxes are extremely important. So you do not sit here and think about, oh, I'm going to get this large amount of money and I don't have my taxes in order. So again, we can help walk you through the process and get all this tax stuff in order, but you have to be able to be or willing to be coached and listened to. We coach a lot of times, a lot of CPAs and all of the above, just because some people say they're professionals, but they don't understand the lending part of the game. Okay, so we want to make sure all that makes sense so you can get the best results. All right, so you got a good picture of exactly what it takes to get through the door when it comes to the lending side. This is just some of the basics. All right, there's a lot more to it. We will get into more as we continue through the podcast episodes. I want to make sure you get the best understanding because I'm in the trenches every day. We raise money on a regular basis all the time. So when I talk to you about these things, this is not something I just made up for content. This is not from someone else's video. This is all work every day in the trenches, working with bankers, getting information from them, as well as watching the responses based off of all the people we send to each bank. So we know how they think, and that way we can give you the right information. So that way when you come to us, you understand how this works and have a realistic idea of how we can actually execute and get you max dollars. So with that being said, this is Ashton Sanders with another episode of the Banking Podcast. Thank you so much for your time today, and I hope that you take some time today, hug your family, spend some time close. I know we're all entrepreneurs and we're trying to build, but make sure you spend the time with your family because no matter how much money you make, you can't take it with you. With that being said, we'll see you in the next episode.